Good morning, ladies and gentlemen. A very warm welcome back on Business Today Television. The flow of quality third quarter earnings continues with corporate India, and it's now adhesive maker Pidilite that's come up with a fairly decent set of numbers where sales in the quarter gone by are up 10% at 3,710 crores. Both sequential and year on year, there has been a rise. Let's look at the earnings. Net profit for the quarter gone by is up 13% at 624 crores. Again, both sequential and year-on-year rise. We are joined by Mr. Sudhanshu Vats, Managing Director at Pidilite Industries, to discuss the way forward and to analyze the numbers that have come in so far. Namaste, Vats saab, बहुत बहुत स्वागत आपका. How do you look at this 13% rise in net profit? What were the two or three major contributory factors?
धन्यवाद शैलेंद्र. I think always a pleasure. आपसे बात करने में always a pleasure and so good to hear from you. I think जो हमारा पिछला तिमाही गया है और the last 3 months which have gone by actually have been a strong set of results. I think the margins have a play of two things in my opinion. Margin expansion, which you have seen in last quarter. I think the first is that we continue to maintain a steady underlying volume growth, Shailendra. So underlying volume growth has been again very strong, and I think so this 10.2% revenue growth is driven by a strong underlying volume growth, and therefore, and the second piece which is there is that our raw materials have been benign. So I think raw materials being benign, coupled with steady underlying volume growth, has delivered profits for us and being able to deliver the bottom line at 13%, as you said. In terms of growth, if I could say, I think the two star brands of growth this quarter have been Roff, our tile adhesive brand, which has grown very well, and the second one is Dr. Fix-It. So these two brands, which are in the construction area, what we call construction chemicals, have delivered standout growths within our performance of good growths.
Okay. Sudhanshuji, what we'll do is we'll just first clear out the niggling areas and then we'll look at good things. With your permission, let's look at the international part of the business. Slightly weak. That could also be because of currency fluctuations. How do you look at geographical spread of Pidilite at this point of time? Any highlights that you would like to share?
That's a great point, Shailendra. I think as far as South Asia, if I was to further break it up, as far as our South Asia business is concerned, which is basically Bangladesh and Sri Lanka, these businesses have done well. Bangladesh, despite all the challenges within that country, our business continues to deliver, mid-teens kind of a growth. So therefore, that is quite heartening. South Asia piece is doing very well. I think it's in the newer areas of Africa where we are getting into a little bit of our businesses in that zone in Africa and maybe even Egypt and all that, where there have been individual challenges, Shailendra, but something which we cannot surmount. We are putting together a strong strategy which will come into play as we continue to build and explore Africa. And then we'll do it very selectively. We'll do it in specific countries and with specific product segments and businesses of ours. And I think we are putting together a strong thing to get back that growth momentum as far as that is concerned. So from our international strategy point of view, we will continue to drive South Asia very well, which is something which we are doing well. We'll continue to drive that aggressively. We will build and explore Africa even more systematically so that we are able to deliver better growths in the quarters and years to come.
Okay. Mr. Vats, I'd request you to please touch upon two major events that have happened in the last 1 quarter and 6 months. One is, of course, the change in labor laws. How did that impact your P&L account? And secondly, the GST rejig. Has it triggered some fresh volume into the system? So one is positive, one is negative.
Great point, Shailendra. I think let's pick up first the labor code, the new labor codes which have come in within that, the wage code of the 4 codes. In the quarter 3, we have already taken into account about 51 crores, as you will see through our numbers in consolidated numbers. And we basically that 51 crores. So therefore, our EBITDA expansion of 40 BPS, Shailendra, is after taking into account that 51 odd crores. So therefore, there is about 100 plus bips sitting there in terms of that. So that we've taken into account. We have taken most of the things which are there, which are currently clear. We have accounted for all of them. So I think that, and we've been able to absorb that and still grow our profitability. So that gives me a lot of confidence. We'll be one of the few companies which have done that well. I think as far as GST 2.0 is concerned, Shailendra, I think GST 2.0, we see a indirect benefit. We will continue to see that benefit, in my opinion, because I think what GST 2.0 has done, and I'm personally very convinced of it, and I'm seeing some evidence as well, is making most of the household products taxed at around 5% is a good thing for a country like India. Now, if we stay at that 5%, it will allow people to have higher disposable incomes, which they can perhaps use for discretionary expenditures. Now, whether they will go into education, they will go a bit in tourism, they will go in home improvement, or in purchase of some other goods. Those are things which will flow out. So in my opinion, it's a good thing. Over a period of time, as a company, we will also see some impact. I can already see a little bit of impact between the tax relief which was given in the previous budget and the GST 2.0 in some buoyancy in our urban demand already, Shailendra. So there is a little bit of buoyancy in our urban demand. Already initial days, I see some of this play out over the quarters and maybe in the next year or so.
Mr. Vats, we are desperately hoping that this, GST rate cut spreads across sectors and it prompts corporates such as you to again reinvest. Of course, Pidilite has already been a very, very big creator of capacity. Let's now focus on that part of the equation. What is the current capacity utilization across the board for Pidilite across product lines, and what is coming on stream in calendar 2026?
So at Pidilite, the way we plan capacity, first of all, with a vast array of products, product categories, and SKUs. So I think the capacity utilization varies from product to product, but it is healthy capacity utilization, I can tell you. More importantly, what we are doing is in the years ahead, we are basically putting in additional capex, Shailendra, in both areas. In the growth area, so particularly for our brand Roff, which is a rapidly growing brand, we are putting up additional plants in the next 2 years. You will see multiple new plants coming up there. So that's the piece which is happening, because they're taking your production facility closer to the market always helps grow the market. So I think that's something which we have seen. So we will continue doing that. I think the second area where we are putting in capex is basically continuing to modernize and automate our existing core businesses and plants. There again, you will see that in the next couple of years, there are 2 large plants which will come up, even for our core categories, where basically we're going to invest with state-of-the-art plants. And these are like for brands like Fevicol and others. So I think that's what is happening. So we are continuing to stay focused on additional capex and making sure that we are ready for the future.
Okay, one thing perhaps that worked out, let me just get this clarification up front. If the labor code costs were not there, your profit, which is 624 crore rupees, would have been higher by another 50. Am I right?
You're absolutely right.
Okay, so that's out of the way. Now, coming to raw materials, we've seen a margin expansion, which you point out very well, plus the negative correlation with the labor cost. Now, is it because, and therefore, and despite these two, profit rose. So it's obviously that raw material costs have been very, very helpful to you. How do you see that trend now?
That's a great question again, Shailendra. I think we have our raw material, and one of our main raw materials, VAM, which we talk about, I think came in at about $840 in the quarter that went by. I think it is that VAM has overall been benign. We think it has bottomed out in quarter 3. But having said that, I think it will remain relatively benign in the foreseeable future. So I think between that raw material being quite benign, also absorbing some of the rupee depreciation through mix improvement, a little bit of pricing, and a little bit of cost optimization, we stay committed to our corridor of 20 to 24, Shailendra, and maybe at the higher end of the corridor, as you've seen in terms of our numbers now.
Yes, we've been discussing 22 to 24 for I think last 8 odd quarters with Pidilite.
Yes.
Your predecessor and our common friend spoke extensively about it as well. Two questions, sir. Volume growth and pricing power. You
Yes.
are blessed with a brand which has amazing salience and resilience. How has volume growth fared, and how is pricing power at this point of time?
So if you look at it, our underlying volume growth in the quarter gone by has been about 9.3%. So I think therefore volume growth has fared quite well, Shailendra, if I could say that. And I think in terms of pricing power, what happens is the way we define, we drive it through a policy. So therefore, what is the kind of premium we would like to enjoy on the next competitor? And that premium has to be sensible. You can't continue to take up prices because that's not good for a country like India. You've got to deliver value to the customers, and we are very conscious of that. So I think in that band of 15 to 20% premium, we will continue to operate. That gives us, as we go forward on the portfolio, not necessarily on one brand, Shailendra, I think it gives us a scope for about 100 to 150 BPS to be able to put in on pricing over and above volume and mix.
Okay. I have one final question on the free cash flow side and the working capital side. How are they looking at this point of time? You barely have any debt, so nothing to talk about on that side. So working capital and free cash flows.
Yeah, so we've had very healthy free cash flows. As a matter of fact, as if you look at the quarter we've closed, we are now at about 3,500 crores of cash in our balance sheet, as you see. We have no debt, as you rightly pointed out, Shailendra. And I think we've been continuously working on our working capital improvement. So we've been bringing down our working capital in number of days, quarter on quarter. And I think the quarter that has gone by, quarter 3, has been one of our best quarters in terms of working capital. We've optimized it quite a lot. And I think we'll continue on this journey to optimize working capital in order to create, fuel for growth as we go forward.
Okay. Mr. Vats, it's always a pleasure. And as I've often said, Pidilite ka juda rahe to bahut acha hai. He's wishing you all the best for the coming quarters. Wonderful capacity expansion coming on stream. Let's hope the international business works better now that the currency is on the way towards stability. Thank you so much. What a pleasure in hosting you, sir.
Thank you. Thanks, Shailendra. Thank you. Always a pleasure. Thank you.
That, ladies and gentlemen, was Mr. Sudhanshu Vats, Managing Director at Pidilite Industries, where sales grew 10% in the quarter gone by, 3,710 crores, and net profit was up 13% at 624 crores. To costs, labor costs, labor code cost them 50 crores, otherwise profit would have been higher, and raw material spaces have been benign. Thank you so much, sir. Have a nice day.
Thank you.
If you like the video, do like, comment, share and subscribe.